about NIO is that it has pioneered some really forward-thinking battery tech.
NIO stock will reach $500. Here's why. NIO is a fast-growing Chinese electric vehicle manufacturer with very attractive products. The BOS technology provides a PVU, which should help NIO gain market share in the coming years. NIO's valuation is indeed high, and prices have already been set for many future growths. Investors may have to wait patiently for the growth story to unfold. At just under $40, NIO is currently valued at over $60 billion. That's about 40% less than its valuation stock trading when it peaked in early 2021, when most of the NIO's competitors, including Tesla, are doing well. Now, if everything plays out well for NIO, it's sure to reach the $500 mark. Let's hop into the details to know why it's finally going to get there.
It took Tesla 16 years to become profitable. How long is it going to take NIO?
Is NIO even a good stock? Because NIOs are active in the high-growth EV market, they are benefiting from market growth. NIO also has an attractive product portfolio, which includes acclaimed models such as the ES6 and ES8 SUV. What makes NIO different from most other EV companies is its battery exchange technology, which allows consumers to use a fully charged battery in minutes when they access one of the NIO battery replacement stations. This means that the battery replacement takes about the same time as refueling an internal combustion engine-equipped vehicle, while most EVs take more than a few minutes to charge, which means significantly reduced downtime when driving long distances with an EV. NIOs have no significant footprint outside of the domestic market yet, but NIO battery replacement stations are currently being built around China. By 2021, due to strong delivery growth, NIO may generate more than 100% revenue growth, as analysts currently expect revenue to grow by 130% this year. After a substantial increase in revenue of 480% in the first quarter, NIO expects deliveries in the second quarter to increase by approximately 110%. As a result, NIO's growth rate has surpassed that of the entire electric vehicle market as well as its peers such as Tesla. According to analysts, Tesla will grow by about 50 to 60% this year, which is about half of the expected growth rate for this year's NIO. It is of course impossible to maintain 100% growth forever, and the growth of NIO in the next few years will also decline from that level. However, because its products are highly praised in the local market, and the company is also ambitiously planning to enter the European large-scale electric vehicle market, NIO will still achieve very considerable growth in the next few years.
Yeah, NIO, it means a new day.
Yeah.
And our Chinese name, Weilai.
But what will it look like in 5 years? Most people estimate that NIO's revenue will grow by more than 100% this year, but growth forecasts beyond this point are even more divergent. Taking 2022 as an example, analysts' consensus on NIO revenue is $8.7 billion, which is an increase of 78% compared to the 2021 consensus. However, the range of estimates is wide, and analysts' estimates range from $7.3 billion to $11.9 billion in revenue in 2022. In other words, the most optimistic estimate believes that NIO's income is 60% higher than the most pessimistic estimate. Given that these estimates are for 2022, only 1 year away from now, this huge difference shows how difficult it is to predict the exact revenue or profit figures of a company like NIO. For my estimation of revenue in 2025, I'll follow the analyst consensus on 2022, which is $8.7 billion US, and then assume that revenue will increase by 1.5 times. The overall market growth rate in 2023, 24, 25, and 2026 is expected to be 27%. This is to 2026, that is, within 5 years, our revenue will reach $34 billion US. This is to 2026, that is, within 5 years, the revenue will reach $34 billion US. Given that analysts currently predict that revenue will grow by 110% this year and about 80% next year, some readers may think that the 40% growth rate for 2023 to 2026 is estimated to be too conservative. But the main unknowns and uncertainties surrounding competitive pressures, government policies, etc., mean that I think forecasting a higher growth rate many years in advance may be too optimistic. What does the $34 billion top line mean for NIO's stock price? Currently, the stock is valued at 11.6 times expected sales this year, which is almost in line with XPEV's valuation and slightly lower than Tesla. Looking forward to 2022, we see that the current valuation of the stock is about 7 times the expected earnings, while the current trading prices of Xiaopeng and Tesla are 6 and 9 times the expected earnings. We very much doubt that the sales multiple of ordinary electric car companies will reach high single digits or even double digits in 2026 because this is too different from the 0.52 times revenue multiple used by traditional car companies. They usually negotiate. But when we assume that NIO, as a pure electric car game, will continue to be traded at a price higher than that of traditional cars in the mid-2020s, a sales multiple of 3 or 4 times may be a realistic estimate. When we increase our 2026 revenue forecast by 3.5 times, this equates to a market value of $119 billion, which is approximately 90% higher than NIO's current market value. However, the number of NIO shares is not static. In fact, it has risen sharply in the past. When we assume that the number of shares will increase by another 20% to 1.9 billion shares by 2026, the stock will trade at $61 in 2026. This means that the stock has a potential upside of 55% in the next 5 years, or about 9% per year. That's not unattractive, but it's not an absolutely outstanding return. Most importantly, NIO, like many other EV startups, is a company with above-average volatility, above-average risk, and above-average uncertainty. Therefore, I don't think that NIO is too attractive at the current price because the expected performance is reliable, but at the same time, it's accompanied by considerable risk uncertainty. Of course, it can be argued that the projected growth is too high or too low, or that the target sales multiple for 2026 should be different. However, as a basic situation, we think this is reasonable.
Producing 1 million units in China, how much of a challenge is Tesla now?
But is it worth buying NIO stock now? Looking back, it's clear that $10 NIO about a year ago was a great opportunity, and buying $67 NIO at its peak earlier this year was a pretty bad decision. Today's NIO, at a high of $30, falls somewhere in between those two extremes. We think for long-term investors, there's a good chance NIO will generate solid returns for many years to come. However, at the same time, much of the growth is currently factored into stocks, and it is impossible to predict what competitors will do in the years to come, how governments will adapt to electric vehicles, what is the quality of deployment in Europe, and what other markets will go, etc. I think NIO is more attractive than many other EV companies today, including many EV startups that don't have viable products yet, and compared to Tesla. We wouldn't be surprised to see NIO stock generate solid returns in the 2020s. However, we don't think NIO is an absolute buy right now, as NIO is still trading at a pretty high valuation, for the sake of the moment, even taking into account its strong growth. For the enterprising and not immune to the risks and uncertainties surrounding future product launches and international expansion, stock volatility, etc., NIO could be an option worth buying today. But it's not a good option for everyone, and some may want to watch the electric car race from the sidelines instead of putting their money at risk at current valuations. Currently, the analyst consensus stock price target is $59, but I personally think this is not realistic in the very near future. Based on the expected sales in 2021, NIO will be a sales multiple of 18 times. However, over the next 5 years, stock prices in the region will be achievable. Let us know your thoughts in the comment box below. If you enjoyed this video, then don't forget to like it and subscribe to our channel and hit the bell icon to stay up to date with our latest videos.